Welcome to This Explainer. Today, we're diving into one of the most high-stakes, wild stories unfolding in the commercial space industry right now. We are looking at Firefly Aerospace. On one hand, this is a company experiencing absolute explosive growth, breaking financial records, and successfully landing on the moon. On the other hand, they are navigating the incredibly harsh, cash-burning realities of the space business. We're going to break down their massive second quarter of 2026, untangle their unique business model, and look at whether their sky-high valuation can actually survive the brutal physical and financial risks of reaching orbit.
Here is our roadmap for today. We'll hit their massive Q2 earnings, dig into their surprising revenue sources, check out their lunar ambitions, see how they stack up against Rocket Lab, and finally, look at the real financial risks they're facing. Let's jump in. Section 1. The $100 million quarter. Let's get right into the numbers that absolutely shocked the space industry in Q2 of 2026. Firefly Aerospace just completely smashed expectations. For the first time in their 9-year history, they broke the $100 million threshold. We're talking a record-breaking $117.7 million in revenue in just one single quarter. To put that in perspective, that is a 46% jump just from the previous quarter alone. For a space startup, hitting that kind of number means they aren't just experimenting anymore. It proves they are reliably scaling up commercial operations. And when you compare it to the same time last year, it is a staggering 659% year-over-year revenue surge. Honestly, you just don't see this kind of acceleration very often, even in a fast-paced sector like aerospace. Going from tens of millions to well over 100 million in that short of a time frame signals a massive shift in Firefly's operational tempo. They are proving they can execute on huge government and commercial contracts simultaneously. But it's not just the cash coming in right now. They've also locked down a massive $1.5 billion backlog. You know, in aerospace, a backlog is basically your economic moat. It means revenue is guaranteed for years, allowing them to confidently plan their long-term manufacturing. It's actually up from $1.3 billion just one quarter prior. Management even noted that 95% of their targeted full-year 2026 revenue is already booked. And a huge chunk of that future security, it comes from a recent 2-year contract extension with Lockheed Martin, which secures launches all the way out to 2031. Section 2. Beyond just launching rockets. So you've got to ask yourself, how exactly does a rocket company make over $100 million in a single quarter, especially when launches are so notoriously tough and prone to delays?
Well, you'd probably expect traditional launch services to bring in the lion's share of that money, right? Actually, launches only brought in $9.4 million. A massive 92% of their revenue, that's $108.3 million, came from spacecraft solutions. Firefly has evolved way beyond just being a launch provider. They've quietly turned into an end-to-end space infrastructure company, capturing value long after a rocket actually leaves the launch pad.
So what's driving this astronomical growth? It's divisions you might not have even heard of. First up is their Elytra orbital vehicles, which are pulling in lucrative deals, like a $75 million NASA Moonfall subcontract to deliver drones to the moon's south pole. Then there's SciTech, their AI-powered defense software arm. They just secured a huge $94 million Space Force contract for the ground-based radar digitization program. By providing critical missile warning software to the Space Force, they're diversifying away from the volatile hardware launch market and moving straight into high-margin, reliable defense software.
Section 3. Blue Ghost and the Moon. Let's look at how all this builds into their most ambitious project, their absolute crown jewel, the Blue Ghost Lunar Lander program.
In March of 2025, Firefly made history. They became the first US-based private company to successfully soft-land a robotic spacecraft on the lunar surface, placing their Blue Ghost lander exactly in Mare Crisium, a large basin near the eastern edge of the moon. This is an incredibly challenging feat of engineering, putting them down not far from where the historic Apollo 15 and 17 missions explored decades ago.
And they didn't just land, they got straight to work. While there, they successfully deployed multiple NASA-supported payloads. You can literally see the Lister instrument penetrating the lunar regolith, kicking up plumes of moon dirt as it probes deep into the ground. It's designed to measure the moon's endogenic heat flow. That's a highly complex scientific undertaking that, previously, could really only be done by human hands during the Apollo missions.
This stunning technical success translates directly into business success. CEO Jason Kim called this achievement a revenue-generating flywheel with NASA as the base customer. Because they proved they can actually execute on the lunar surface, the contracts just keep pouring in.
They now have a total of 6 awarded lunar missions, including a recent $144 million accelerated commercial lunar payload services contract. And get this, they're leveraging this incredible momentum to expand to Mars, building a critical aeroshell for NASA's upcoming Skyfall mission.
Section 4. Firefly versus Rocket Lab. Next, we really need to contextualize Firefly's position in the broader space economy by comparing them to their primary rival, the public space giant Rocket Lab.
Rocket Lab is going all in on a strategy of total end-to-end integration. Think massive acquisitions to build global communications networks. Because of that, the market prices them at a hefty 81.3 times their sales. Firefly, on the other hand, is hyper-focused on lunar services and rapid, responsive launches, trading at a much cheaper multiple of 26.2 times their sales. For investors, it really highlights a stark difference in how the market values generalized space conglomerates versus highly specialized infrastructure providers. But to really compete long-term, Firefly needs a robust launch cadence. In the space industry, reliable and rapid launches are the only way to survive. Right now, they're heavily constrained by production. To fix this, they're upgrading their small-lift rocket to the Alpha Block 2 configuration, targeted for late 2026. That upgrade is entirely about increasing manufacturability so they can launch faster and cheaper. Looking farther ahead to 2027, they're also co-developing the medium-lift Eclipse rocket with Northrop Grumman. And the Miranda engine for that vehicle? It just crossed 150 successful hot-fire tests.
Section 5. The real risks of space. Okay, it's time to bring this analysis back down to earth and look at the brutal financial and operational realities of this industry.
Because despite those record-breaking revenues, Firefly is still severely unprofitable. In fiscal 2025, they reported a net loss of $334 million, along with a negative free cash flow of over $237 million. Even more concerning, 86% of their revenue is tied to just 5 major customers. In the startup world, that is massive concentration risk. If even one of those major partners delays or cancels a contract, it could be absolutely devastating to their cash flow and balance sheet.
Furthermore, space is just incredibly hard. Physical reality is often completely disrupt financial projections. Firefly has faced some serious setbacks, like an in-flight anomaly during Alpha Flight 6 back in April 2025, and a booster explosion during a static test in Texas later that year. Because they've had to redesign the rocket to that Block 2 configuration, increasing its length and reinforcing the structures to prevent future issues, they've had to push its vital debut to the fourth quarter of 2026. That cuts their expected launches this year from 4 down to just 3.
So, as we wrap up this explainer, we're looking at a company balancing a massive $1.5 billion backlog against relentless cash burn and the unforgiving laws of physics. They do have strong liquidity right now, with over $940 million available. But the ultimate question remains, can Firefly scale its production, execute these wildly complex lunar missions, and achieve true profitability before the money runs out? It is absolutely one of the most exciting races in the modern space economy, and we're going to be watching it closely. Thank you so much for joining me.